welcome back to ASX Market Watch. Thank you very much for joining me. It's really great to have you checking out the markets with me today over the last week and over the last over the last 12 months really as well, just seeing where we're heading and what to expect in the market as well. And so yeah, thanks for stopping by. It's really great to be checking out these three indices that we're checking out this week. The first is the ASX Top 200. The next one I'm throwing in is the Seng in Hong Kong, just to get a little bit of a look from our Asian neighbours and just to see exactly where they're heading, and maybe that could be influencing the Australian markets. And also the famous Dow Jones Index. And the reason I've included the Dow Jones Index is because it works extremely well with Elliott Wave, and just looking at where it's actually reached all of its targets, its initial targets for its Elliott Wave targets, and what to expect from the Dow Jones, which then might lead into the Australian market and potentially the Asian markets as well. So let's get into it. Thanks for stopping by again. Hey, it's the markets. It's always changing. It's crazy, but we use these very simple tools, and these tools are our trend lines. So ridiculously simple. All it is a line on a chart. All you have to have for an uptrend, this is the ASX Top 200, all you have to have for an uptrend is higher peaks and higher troughs. And that's exactly what we've got from March 2009 through till today. And in fact, over the last 7 months now, 7 months, we've had, as you can see, we've had we've had 3 higher peaks, but at the same time, we've had lower troughs. So what this has given us is a broadening top, or a broadening wedge formation. Now, as I spoke about last week, we got an early sell signal, and the sell signal was because of this shorter term trend line being crossed. I'm just going to enlarge that if I can. So it crossed it last week at about 4,900. Now, as you can see, the market has fallen away significantly this week. It's fallen away at least 4 to 5%. No, maybe not even that. Maybe just sort of 2%. But still, it's fallen away. And last week, I also said that the market would find support at the longer term trend line, which is that one that I had drawn in there. Now, that was at 4,800. And that's exactly where the market found support over the last 3 days of the week. So that was being Wednesday, Thursday, and Friday. So yes, it did continue to fall. It got the early sell signal. But yes, it also found support exactly where we wanted it to find support, which is the trend lines, which is what they tend to do, which is why I use them, even though they're ridiculously simple. So what do we expect from here? Well, again, last week I said that from these broadening wedge formations, one of the most probable patterns is that it actually has a sharp fall, so we could be expecting it to see around 4,350, but then it will also shoot up from there, which is what it did in August 2007. That was the beginning of the credit crisis. But at the end of the day, it's still really in this big sideways formation, and in all honesty, a lot of the stocks are really consolidating at the moment. They're not sure where they're going. Some are having breakouts, but yeah, a lot of the stocks have been trading in sideways motion for probably the last 6 months. And that's just because 3 out of 4 stocks will follow the overall market. So it's, again, not really rocket science. But yeah, if the market crosses below that 4,750 mark, that's when we could expect potentially more lower prices. And really, the longer term signal, if I just increase this, we'd be looking at is on a weekly chart. This is 1 bar equals 1 week. Now, if we had a bounce from here and then it went through the previous trough, so that would be a Dow theory exit signal. That's one of Dow's theories. He had a whole series of writings in the late 1800s. That was one of his theories, was lower peaks and lower troughs. So if we saw that on a weekly chart, that would be a bearish signal on a longer term basis. Hope that helps. This is the Dow Jones. Now, the Dow Jones is looking heaps better than the ASX Top 200. This is the uptrend line, again, because we've got higher peaks and higher troughs. The downtrend line, I think, was crossed in July 2009, so we've had this great bull run up until then from the Dow Jones and the American markets. Again, 3 out of 4 stocks will tend to follow the overall market, so these are where the big boys are heading. The top 30 industrials in the Dow Jones. Really, we've got support at 10,500. So again, like, we're well above that support at the moment. Looking at the Elliott wave now, this is just the one thing, because Elliott wave was really designed around the American markets by Ralph Elliott, and this is what I want to show you, because we've got, if I can just find the right one here, there we go. So that's our wave 1. At least this is one way of looking at the current Elliott wave count on the Dow Jones. Wave 1, wave 2, wave 3, which tends to be longer or around the same, usually it's longer than the wave 1, and in this case it is. Wave 4, which tends to be a sideways movement, and wave 5, which can be 50 to 162% of wave 3. Now, it's reached the 50%. Only just. So that's our initial target for the Elliott wave. That could mean that it is topping out, because it has reached the target as an Elliott wave point of view. But again, it's still above its long-term uptrend line, and it does have that support at 10,500. And what happened with the support at the ASX Top 200? Found support at the longer-term trend line. So keep a very close eye on that one if you're looking to sell, because yeah, that's where the market could be finding support at the moment. The last one I'm looking at is the Hang Seng, Hong Kong in China, and these. It's kind of simple. Again, all we've got is our uptrend line. We've got a medium-term downtrend line. Again, it's been really going sideways for the last 6 months. So that's probably where the Australian market is getting most of its lead from, is from our Chinese, from the Chinese markets as well. Again, because we're so resource-driven, and we do tend to follow the China markets as well. The Japanese markets are tending to follow the American markets at the moment. So, yeah, really what to expect here. If you wanted to do an Elliott wave count on the Hang Seng, we've got 1, 2, 3, and currently in our 4th. What we could be seeing here is a failed 5th wave, which is what they do call it if it doesn't reach the 5th target. But it is consolidating in a sideways movement, which is typical of a 4th wave. But yeah, definitely could be seeing the failed 5th wave, especially because it's just starting to peak below the longer-term uptrend line here. So it's just peaking below support at 21,000. So that's all we've got here. And again, stocks are still making breakouts to the up and to the downside. A lot of them are in a sideways movement, but we just wait for the market to confirm which way it's heading. Once it does, it'll be all on. You'll be able to sort of take positions with more confidence, because 3 out of 4 stocks will tend to follow the overall market. So thanks very much for stopping by, guys. Check out the website. It's asxmarketwatch.com. It's got a free course on there. It's got a few of the trades that I've been taking recently, and yeah, all of it's free. So at the moment, which is really good. If you wanted to learn how to trade or wanted to learn a few more tools for your trading, check it out. It's really cool. Other than that, hopefully I'll see you next week, and yeah, we'll talk a little bit more trading, which is always fun to do. See you next week, guys.